is basically go over with you what I do to prepare for the morning, for the open, okay? And how I go about it and my step-by-step process. I told you if you are new to this, it might seem overwhelming, but if you're structured, methodical, and after a little bit of time, a little bit of experience, it becomes a seamless process. You do the same thing every day. So I'm going to start off by telling you the very first thing that I do. The very first thing that I do starts the night before, okay? After I complete the newsletter or the table with the plays that I'm calling, that I'm taking, and I update the stops and I input all all those orders in my account. I have a laptop here. I don't know, you don't see it, but that's where I run my. That's where I have my where I run my swing account. On the side here, that's just for crypto and for scanning. Okay, so that's what I have right now. I'm in this XPR. So let me show you. XPR. I don't. That's no. Anyways, I don't have the charts opened on this, but XPR has a daily buy setup, so I like it a lot. So that's what I'm watching. I'm already in it, but if it takes out 71 cents, that is, so 0.716, I'm adding to it. Anyways, so then I said it starts the day before, because the first thing that I do, or the last thing that I do at night, the day before, is I create 2 watch lists. One has all the swing positions that I have open, and in one watch list. Then, and next to it, I have another watch list with all the open orders. That includes the plays that I'm taking, and the stops for the current plays. And what I do the first thing in the morning is I review the open positions, and I also review the orders, just to make sure that everything looks good. So that's so again, today's discussion is about how to prepare yourself for the day, or how to prepare for the open. Okay, so step 1 is, for me, is, if I were to just tell you what step 1 is, and again, it starts the night before. Review open positions, review open orders. The second thing I do, of course, I take a look at the market quickly, but I don't really do any analysis with the market. The second step is scan for gaps and create the gaps list. So now a lot of people have asked, how do you scan for the gaps list? It's pretty simple, I think is simple. So what I do is I collaborate with James and GB in the room on it, but what I personally do is I have a TC2000, and I use this program for scanning for swings, right? That's how I find all my swing trades, pretty much, from the gaps list and from TC2000. And in TC2000, adjusting the window here so you can see it in a minute. In TC2000, you can add a pre-market. This is post-market because the market is already opened. You can add a pre-market, post-market watch list. So you just go to watch lists. I think I haven't done it in a while. Either watch list or easy scan. And let me see if I can just type. Okay, there it is. Post-market, or in the pre-market, it's called pre-market. So you click on that, and it gives you a list of it gives you the pre-post-market watch list. And then you add your conditions. So here's my conditions, right? Price over $1, volume in the pre-market over 1,000. Really, volume, you can drop it down to 0, but with TC2000, there's a lot. Then you get too many symbols. So I only do over 1,000, and then I have a formula here. Let me see if I can open it up. There it is. So this formula, basically, if you type it into TC2000, I'll type it into the room so you can copy and paste it if you want. This locates, this basically pulls up all the list of stocks that are gapping up 2%. You can change it if you want 5% or more, and down 2%, and you can change it to down whatever you want. If you want your minimum to be 5%, you could change it to 95. So, and so with this little setup, I'm able to find the pre-market gaps. But no right now the watch list is empty, because it, right now during the, this shows up only populates only in the pre-market and the post-market. So so that's how I do it. But there's other ways to do it. I used to have TradeIdeas.com. So TradeIdeas.com is a wonderful scanner, but it costs $150 or something like this per day, per month. So, or 130, something like that. So that's probably the best scanner on the market. There's other scanners too. There's ScanZ I had for a while, but not as good, I think, as TradeIdeas. There's also a great website that I use called Market Chameleon that lists not all the gaps, but a good amount of them in the pre-market. Okay, I don't know where it is. It should be at the there it is. Most active, top gainers, and top decliners, basically in the pre-market. So here's that website. So the first step is I review my swing plays basically and the open orders. The second step, I start scanning for gaps. Okay. Now I use TC2000 and I use Market Chameleon. You can use, again, a scanner. You can use websites, briefing.com also, Morningstar or something, Zacks probably, the FinViz or the heat map has also, gives you the NASDAQ heat map, the FinViz heat map. They'll show you what's moving in the pre-market. James, there's another way to do it, a really cool way to do it and free, is you go to TC2000 or any other platform where you can get a list of a lot of all the US common stocks out there, let's say that trade over $1 in price and over, that average over, let's say, 300,000 shares or 500,000 shares per day. And I've already copied and pasted, I've already downloaded that list last night for you, and I'll share it with you. But basically, you get a list of all US common stocks that are tradable, somewhat tradable. And in the morning, what you do is you open that watch list, right? And you paste it, you copy and paste it into a watch list in the morning, so that it shows you, and then you sort it by percentage up or down, right? This way, at the top, there's going to be all the gap ups. At the bottom, all the gap downs. So that's a free and easy way to do it. Again, you have a list, and I'll show you the spreadsheet. I downloaded the list last night, and there was about 2,400 stocks. And where is it? Let's just open Excel and then any of the. Hold on one sec. So where is it here? Here it is. It's not opening up. Looks like I moved it. All right, let me just find it real quick. Should be in here. Okay, there it is. So check it out. I downloaded this last night. Sorted by volume, okay? So Stock Universe by volume, July 25th, 23. And so this gives you the list of all US common stocks. And there's, I think, 2,400 symbols on that list. It's just an Excel spreadsheet with a list of all the US common stocks that do over 500,000 shares per day. Exactly 2,400. What you do is you copy the entire list. If your watch list allows you, if your platform allows you to do so, you copy it, and my platform does. You copy it and you paste it into one of these watch lists in the pre-market, and then you sort it by percentage change. Okay? At the top, that's all the stocks that are gapping down. At the bottom, those are the stocks that are gapping down. You copy the watch list and you go over them by one. I mean, the ones that are gapping up and gapping down. So there's various ways to find gaps. There's this way that I just described. There's a scanner, a website, a heat map, like an earnings calendar. You can check just the earnings calendar and check those symbols. and then the best way is to be in this room, to tell you the truth. Because what I do is I do my part in the morning, James does his part. He finds gaps through the Thinkorswim platform, GB uses TradeStation, and every platform or every source will have different data a little bit. And then what we do is we compile the data, delete the duplicates, and then I still go over it, and I delete the ones that I don't like at all, and then I publish the entire list. And then when I come on the mic, I narrow it down to, let's say, a dozen gap ups, a dozen gap downs, and I further narrow it down to the favorites. So you see what I mean? So 3 different sources, and then I go over the list, clean it up, publish that list, give you my favorites, and then when I come on the mic, I've already narrowed it down to about a dozen gap ups, a dozen gap downs, and then I narrow it down even more by doing the gap analysis with you live on the mic, and then come up with the favorites. So that's how I scan for and compile the gaps list. Everybody asks about that all the time. It's a simple process. It takes a little bit of time, and I'm lucky that I have 2 amazing individuals that collaborate with me on it, because then I can come up with the most comprehensive gaps list that we can come up with. And then the next step after that is, I'm sorry, I skipped a step. It's not that I skipped it, but basically in the morning when I'm reviewing the gaps list, I'm actually clicking on the keyboard, going through the watch list one by one, gap by gap, and I'm writing it down in a notebook. You're not going to see the detail right now, but this is actually today's notebook, so I don't know if you can see. It's July 26th. So I have a notebook where I can organize, and I think I have it here that I can share with you. I'll share with you the PDF, and what you do with this notebook is you take it to FedEx and you print it. I mean, you have them make it, bind it for you, print 100 pages or so, or however many pages you want, and they bind it for you for like $10, and you have yourself a notebook for the gaps. So this is it. It's an it's a PDF document that I'm going to share with you if you want to follow my system here. So obviously that's the date. It's a good idea to write it in, because this way you can go back and if you want to, so you know what day it is, if you want to go back and look at some of the previous gaps. And so so each page has the gap ups and the gap downs. Okay, so for the gap ups, the way I analyze the gaps is really simple, but let me show you. Hold on. So here it is. Everything is simple. There it is. Steps for reviewing gaps. Determine whether the gap is professional or novice, because if it's professional, you want to play in the direction of the gap. If it's novice, you want to play against it, right? You want to fade it. Now this step can be almost entirely removed, because you can just assume that every gap is professional, because 90% of the gaps are all professional. Okay, so you can almost assume that every gap is professional. The second step is the major one, is determine whether the gap is playable at the open or later. If it's something that you want to look to play at the open, or it's something that you want to play later. Now, so that's how I come up now with my favorites. But now you might say, well, how do I know whether I should look to play it at the open or not? That's the trick, is to figure out how is determining whether the gap is playable at the open or not. And in order to do so, I have a 5-step analysis review, right? This is actually from the opening rush. I just snapped a picture yesterday. Those are the 5 things that I review about every gap, but I don't really go over every gap and I review these things. I don't, because it would take too much time. I just look at the picture and I know right away whether something is good or not. But initially you have to like figure out whether the gap meets these conditions or not. So these are the 5 conditions, right? If the gap gets all 5, then then it's a tier 1. It's the best kind of gap you can have. Sometimes the gap is really good, but one of those items is really bad, like it's gapping right into resistance, and it screws up the gap, right? So I'm reviewing the gaps, looking at these 5 things, okay? Looking at these 5 things. The main 3 of the 5 are whether it's clearing resistance, whether it has shock value, and whether the size is too big or just right. Those are the 5 things about it. But look at this gap, which was maybe my favorite today. I mean, from the gap downs, CSGP. What was great about it was the long-term pattern. This gap was ending, and this morning, remember I drew the trend line. It was ending the long-term trend. That's what was really good about it. I wasn't sure whether it was going to be gapping here or there, but I said under 85.25, I think. I thought it was, but anyways, under 86 it looks like. Why did I think it was 85.25? But anyways, so under 86, it means it ended the long-term uptrend. That's a top watch short, and that was the first thing I looked at this morning. But it had 40-cent spread, so it couldn't do it. So sometimes, like I said, these are the 5 items. Most of the time, the most important things are clearing resistance, shock value, and size of the gap. But this sometimes can be really important. This sometimes can be also important. So when I'm trying to determine whether the gap is playable at the open or not, it's not as easy. You have to. I'm thinking about these 5 items, right? I'm thinking about these 5 items. Now, so the first step is professional or novice, right? Second step is, but we said most gaps, 95% of all gaps are professional, right? So you play with the direction. So if it's a gap up, you look to play long. If it's a gap down, you look to play short. Now that's the first step. The second step is it playable at the open or is it not? Now, if it's playable at the open, like if you have a bunch, then you can kind of rank them. Hey, what's my real favorite? Let's just say I have Apple, Microsoft, let's just say, coming up with random symbols. I have these 5 or 6 symbols here, XPNZ or V, XPEV, I think. Let's say I have these 5 or 6 symbols. Which one is really my favorite, right? So can rank, so underline the best gaps in each category for the open category, right? Or in the later category, or you can just put the best ones on the first line, and then the less than perfect on the second line. Under the later category, there's only going to be a few gaps that fall under the open category, right? That are going to be playable at the open. There's going to be a lot more gaps under the later category. So the later category, what I do is I have the best gaps on the first line under the later category, the second best over here, or you can just underline the best ones in each category. Does that make sense? Or you can just rank them like this is 1, 2, 3, 4, right? And then 1, 2. Like these are the best of the best at the open. These are at the open also, but not your first choice. And these are watch for later, but these are the best ones from the watch for later. The second best, third best, fourth best, right? And then under the weak category, those are the gaps that I think are so weak that I don't usually even include in the gaps list when I publish it, right? When I share it with you. These are like really weak gaps. Now, this is professional. These are professional gaps at the open, professional gaps for later, right? These are novice gaps at the open, novice gaps for later. One line for each category, because they're usually blank. There's usually nothing on this line. And then I do the same thing for the gap downs. Now you might say, why not do this in Excel? Why not make your life easier and digital, right? Why are you so old school here? And let me just show you what I mean. Why not create a spreadsheet that says, professional, pro, and then open later, and then novice, right? Novice, open later, let's just say, and this is trying to merge. There you go. Let's say, there you go. And then oops, and you do the same thing for professional gaps, the pro, and then you type it up like so, right? Because for the open, you type, because I'm using my keyboard to go over the watch list. So what I'm doing is I'm using the keyboard to go over the watch list, like so, and then I'm in my left hand. With my left hand, I'm using the keyboard, I'm going down the list here, one by one, right? And then with my right hand, I'm right-handed, I'm writing in the notebook where the gap goes. If I were to be reviewing the gaps list and then, dragging this to the spreadsheet, I don't know if it even drags, it doesn't, right? Moving it to this, or, if I'm reviewing the watch list and have to say, okay, CSGP, and then have to move my cursor to the spreadsheet and type it up. CSGP goes under the open, right? And then I go to the next one, review it, and then type it and type it up in the spreadsheet, for later, MNRO for later. That would take me forever, because then I'm having to go back and forth between the platform and the spreadsheet, one by one. But what I'm doing in the morning is, let's say this is my watch, my gaps list. This is it. I'm going one. I'm writing, and then I'm writing it in my notebook. Going to the next one, writing it in my notebook. Going to the third one, writing it in my notebook. Quickly. Yes, a lot more efficient. Exactly. So I'm being more efficient by writing it in a notebook, writing the gaps down, the gaps in a notebook, rather than using Excel. Otherwise, I'd love to use Excel, right? And save some trees. I'm kidding. I would just to keep my life more digital. So that would be even better. But just to be more, I'm trying to be more efficient, because I don't have a limited amount of time in the morning to get the job done, right? Before I have to come on the mic, before I have to do the open. So this is why I created this notebook, and I'll give it to you so you can, if you want to follow my system. And then I fixed the margins so that when you print, if you want to print on both sides, print both. So these two pages, the margins are have been fixed, so that when you print the notebook, it works out so that you're printing on both sides of each page, right? If you're gonna print just on one side of the page, then just print the first page, okay, and then or give that page to the PDF to FedEx office, and they can create can bind it for you and create a notebook for you, which is what I do. Okay, so back to where we started. So the first step is, let's see, where is that? Here it is. Okay, let me reopen it. Okay, so the first step we said is review open positions, swing positions, right? Review open positions and open orders. Then scan for the gaps list and create the gaps list. And I showed you how I scan and how I create the gaps list. The only part that I didn't really go over in detail is the part about how to determine whether the gap is playable at the open or not at the open, because that's a whole different lecture. But I showed you the 5 criteria, the 5 things that we pay attention to when it comes to gaps, right? The 5 things we look at. And then the third step is, you're doing this in a notebook. So fill out the notebook would be the third step. And then the fourth So the fourth or third step is determine market bias. So what I do is, how do you determine the market bias? It's very simple, and I'll give you these handouts. I'm actually thinking about emailing them to Amber, and then she can send them out. What do you think, Amber? Would that work? A couple of documents. Okay, yeah, I'll send them to you, and you can email them out rather than uploading them to the room, and everybody would have to download 5 different documents. The how do you determine the market bias at the open? Again, super simple stuff. Here it is. Wrote it up so that you guys have it. So here it is. But let me just zoom out a little bit, or fix the. Here it is. And again, you'll have a copy of this. You don't need to even take a picture or. Okay, so the first thing I do is I look at the cues and the SPY to ensure there's no conflict. If there is, meaning that the Q is gapping down, the SPY is gapping up, right? If there is any kind of conflict or they look completely different, if they do, then expect choppy, sloppy trading with not much follow through. Just, you gotta expect it. You're not gonna have much follow through if the SPY and the Qs are not in alignment. So that's the first thing. The second thing is, look at the daily and the hourly charts of the Qs. I hope you can read this or you can see this. Let me embolden it. Look at the daily and the hourly charts of the Qs and ask yourself, based on where the market is opening, what should my bias be? Just ask yourself that question. Based on where the market is gapping to, because the market gaps most days, just a little bit. Based on where the market is opening at, what should my bias be? Based on where we're opening at. So you have to look at the pre-market, figure out where the market is gapping to. And what should my bias be? You should be able to come up with an answer, okay? If not, if there's no clear answer, no clear bias, then don't just say, well, it's not clear, we're gapping up, it's a bullish gap, but we're gapping into resistance, not clear, and then you move on. Don't do that. What you do is, if there's no clear answer or bias, the next questions are, what would the market need to do in order for me to be bullish, and what would the market need to do in order for me to be bearish? So come up with your if scenarios. So the first thing is, based on where the market is gapping to, what should my bias be? If you should be bullish, then be bullish. If the answer is, well, the gap is bearish, but we're gapping to support, okay, so neutral maybe for the open, but what would make you bearish and what would make you bullish? So come up with those if scenarios. You can even mark up the chart. I don't like to have messy charts, but you can even say, let's just say the Qs, right? It's gapping down support. Okay, here's my line in the sand. If we break this, then bearish. If we break above the high here, 380, then bullish. You can even mark it up like so. And then in between, I'm just going to play the small, neutral to slightly bearish since we're gapping down. And then I'm just going to play the intraday trend. So that's my game plan for today. You see what I mean? So forget about this. Forget the fact we don't know where it's gapping to here. We don't know what the market is going to do. I'm just kind of giving you the analysis for today. But we already did it this morning. Market is gapping down to here. It's gapping in between. And I'm expecting, or I was afraid, the buy setup on the daily chart of the Qs might fail. So I have a bearish bias, not but inclination. I'm more inclined to be bearish than not. But we're also gapping into all that support. We're also on the daily chart into the rising 20. So not a good idea to be really bearish or really bullish. Mildly bearish is okay. Right? But you shouldn't be mildly bullish either, because we're gapping down. Most gaps are professional. Most gaps lead to continuation, not reversal. So my game plan for this would be, okay, neutral to mildly bearish, and play the intraday trend however way it develops on the smaller time frames. But bigger picture, I would only be bullish if we take out this resistance. I'd only be really bearish if we take out this support. And that's your game plan for today. It might also be the same. Today the market will probably move a lot because of FOMC. But if we weren't, if we don't move and we stay stuck in this range, the same analysis will be applicable to tomorrow. It'll be the same exact thing, right? So you can even mark up the chart. But again, I don't like to have messy charts, so I don't do that personally. But that's basically that's the way to come up with a market bias, is review the cues in the SPY, make sure there's no conflict. The second thing is I use the cues because it leads the market. Whatever the cues does, eventually the IWM and the SPY will do. Okay, it just leads the market. It always has, probably always will, because technology companies, the top 5 in a row probably are all tech stocks. I mean, the top companies in the country are all tech stocks, right? Maybe Berkshire Hathaway would be the only exception in the top 7 or 8. All right. So that's so I look at the cues based on where the market is opening at. What should my bias be? If the answer is it's not clear, then what would the market need to do in order for me to be bullish, and what would it need to do in order for me to be bearish? Answer both questions, and now you have a plan for either direction the market takes or decides to go in after the open. And then the last point here, I don't know if you can see it. There it is. Note, if the market is opening flat, you can just review the previous day's trend, usually the 15-minute chart, not smaller, and come up with your bias based on the 15-minute trend. So if we're in an uptrend, just continue to be bullish on the 15. If the market is opening completely flat, if the 15-minute is downtrending, then just continue to be bearish. You're just going with the trend, basically. You're not analyzing the gap and where we're gapping to, or you see what I mean? And that's how I review the pre-market. That's how I figure out the bias for the open and the game plan. Okay. The beautiful thing is, even if we get it wrong, we're doing things that are on their own page. We're trying to focus on things that are on their own page. Like this one. Does this look like it has anything to do with the market? No. Now we don't know for sure that that the gaps that we do will not be impacted by the market, but for the most part, if you're doing something if you're trading a powerful gap at the open, it shouldn't really have much to do with the market. So even if you get the analysis wrong, or the market does something unexpected, you should still be okay. But it's nice to always be on the right side of the market. It's nice to be shorting when the market is triggering short, like over here. Okay, nice to be short. Nice to be short when the market is falling. Nice to be long when the market is rallying, right? It just is. And most of the time, you'll be better off doing that. So, first step, we said review open positions. So here's the 4 steps, and the last step is gonna be populate the charts. But here it is. So there you go. Here's the 4 steps. Review open positions, open orders. Oops. Right? Open positions, open orders. Scan for gaps, create the gaps list, determine market bias, and the last step is so important too. You have to populate the charts with the gaps list that you created in a way that matches your notebook. Meaning, you have a monitor right here. I use 4K monitors, those 40-inch 4K monitors, big monitors, and each one has 48 charts. Okay, so I have a huge monitor on the right, a huge monitor on the left, and one in the middle. The one in the middle is for multiple time frame analysis, for my execution platform, for this room, for other things, right? But the one on the monitor on the right is for the gap downs. The monitor on the left is for the gap ups, and then for the bullish watches. So I have a lot of charts. So what I do is I organize the charts according to how I organize my notebook, how I wrote them down in my notebook. So the ones at the open are going to be the first column of charts, right? Because each, there's the first chart, second chart, right? It's 6 by 8. So third chart, fourth, fifth, whatever. So the ones that are the open right here, the ones that are maybe for the open but not as good, are going to be the second column of charts. The ones that are the later category, these ones, the ones that I like the most under the later category, the ones that I don't like as much, the second favorite under the later category, the third, fourth, you see what I mean? And then maybe the novice gaps in the last column of charts on my platform. So I'm organizing my monitor, my charts, to match what I typed up in my notebook. Does that make sense? This way, I know exactly most of the time where every gap is on my charts. I know the open are gonna be in the first two columns of charts. I know the later, they're gonna be organized in the same way. The novice gaps, if there are any, are gonna be on the last column. If I don't have any novice gaps and I have more space for the additional gappers, the really weak professional gaps, then I may put them there. And I'm doing the same thing with the gap downs. If I have scalp watches, I may have the scalp watches on the first column of charts, and then the second column of charts would be the ones that I'm watching at the open. You see what I mean? So organize it however way you want, but I like to organize it in a way to match all the work that I did in my notebook. And now I'm ready for the open. Now at the open, what do you look for? Well, you look for those entries that we talked about in yesterday's coaching. Remember, I gave you 6 different entries? So you look for those entries. I start the open on the 1 minute time frame. This way I'm starting the day with the smallest time frame, so I can see the first entry that pops up. And then as the day rolls on, I have more data, more bars. Then I go to the 2 minute at 10 o'clock, to condense the chart. Because if we were to go, if I were to use the 1 minute right here, unless your chart is like super huge, and even if it was huge, I still don't really know what's going on. Like, I see the market right now is trending down, but do I know where the support is? Do I know how much more downside potential there is? No, I don't. In order to know, you have to condense it by going to the larger. Now I know what's going on. Oh, I see the sell setup. I see the 1, 2, 3. We have room to here. Now I see things clearly. So the same thing, I do the same thing at the open. So the first 30 minutes, I'm on the 1 minute chart. But after, at 10 o'clock, it starts to get a little bit, too many candles, too many bars. So I go to the 2 minute, and now, it makes it a little bit clearer. Okay, at 10 o'clock, and I'm on the 2 minute. 10:30, too many candles. Let's go to the 5 minute, right? At 11:30, between 11:30 to 12. Anytime between 11:30 to 12, I go to the 15 minute, and I stay on the 15 minute till the end of the day. I use it till the end of the day. And so, that's basically how I do the pre-market. That's all my pre-market routine. Any questions about any of that stuff? You tell me. Any questions? Good stuff, I hope. Simple, but, follow the same process every day. So, I'm efficient at it now that I've done it for so many years. It's just really simple, robust, I feel. Let's see. Is there a recording? Yes, there is. Maybe Amber can send it to you, but if you should be able to access through your customer portal. You need to go over 10 times. Okay, in the beginning, you do. And then the first question I'm getting is about my income. No problem. It's funny how, it's like, when it comes to guys, it's money, it's cars, and it's girls. That's it. You give us these 3, we don't even need to eat. I'm kidding. I'm just saying. Those are the 3 things we care about. Most guys, let's say. And that's it. I don't care about the process. I don't care about anything else you have to say. So when it comes to income, it's different from year to year. 2021 and 2020, I made over $1 million each year from day trading. Did I make as much swing trading? No. This year, it's mostly, not mostly, but the majority is swing trading. The majority. And and the half of it, maybe not quite half, but is this position that I have in Tesla. And you see, so that's basically like, that's a huge position that I have. There's, I have two positions in it, so there's like or three positions, the Tesla stock and the TSLL, and they're up a lot, just these two. But I also have a small IRA account, and all I have in it is the TSLL. So this year, it's mostly for me, not mostly, but like I would say 75% of the money maybe came from swing trading, especially in January, and especially especially the Tesla position as well. So hold on just a second. So like this position that I have, so here it is. This is my IRA account, small accounts, nothing huge, but so here it is. You see, it's the net value of the account is 117, but I'm up 74k in that account this year. What do I have in that account? Here's what I got. It's just TSLL. Okay, and it's up 180%, almost 177. Now I realized just recently that TSLL pays 1% dividend. So the dividend is the dividend that I have another position. I thought I did. Is the yen. I have a small amount of money in the yen, but it's not showing up here. I don't know why. So hold on just a second. All positions. What about the yen? Maybe I don't have it. Maybe I don't have it. So anyways, so the yen, I thought I had a small position in the yen, but looks like I don't. So, and so the TSLL is up also 75k in this account, and then it's up 125k in this account. Okay, so the yen alone is the TSLL alone is up 200k. Tesla, I don't know exactly how much it's up because the cost. Let me think. Yeah, the cost basis is messed up, but I got it mostly around $100 to $130, and I added it at 170. So it's not up 340, but it's up like 200 at least, plus 200 there. So Tesla alone is up over 400k probably this year. So, so that's just Tesla and the TSLL. It's the leverage ETF for Tesla. But it's again different from year to year. Some years are great for day trading. Some years are great, swing trading. If you're versatile, you could do really well because you're able to like today, just so you know, today the swing trades, if you have the swing trades that I do in the account, in the newsletter, the swing trades are up $23,000. And I don't like, knock on wood, I don't like to I'm not trying to calculate every dollar that I'm up or down, but if you have the swing positions that I do with the size that I do, which is $1,000 per play, then a risk per play, then they should be up. I mean, today I'm up, so that's 23,000 today. So the swing plays, are doing pretty well this year for me. The day trades profitable, okay, 6-figure, but not in the hundreds and hundreds of thousands because it's slow. I mean, this year has been a little bit slow, as you can see. So it's different from year to year. It's even different from month to month, honestly. You might say, well, but you have a large account. Well, I didn't have a large account when I started, okay? I lived on my own since I was 18 years old. Okay, as an immigrant in this country, moved here by myself. You think I had any money? I didn't have a single dollar to my name initially. And then you start small, and then and then the dollar becomes 5, and then it becomes 10, and becomes 100, and then it becomes, you have a few $1,000s, and then so you start with where you are, and then from there, if you do it right, you'll get there. Most people probably that are really successful didn't inherit it all from their parents. They're self-made, and I'm one of them, but I'm not a billionaire or anything like that. I'm just saying, You start with what you got, and then instead of risking $1,000 per trade, like I do, and sometimes 2,000. Like, remember the DPST? I'll show you just real quick. This one here. If you go to the newsletter today, right? If you go to the newsletter, where is the newsletter? So I'm risking $2,000 on it, not 1,000, because the risk size is 100%. Everything else is 1,000. So this one is 1,000. Massey, TPST is 2,000, and then I have the share size calculated right here. Okay. In fact, instead of DPST doing 162 shares, I just did 175. So I'm a little bit more than 100% risk, more than $2,000 risk. This is $1,000 risk, but instead of 188, I already got it at over 115 yesterday, 200 shares. Just, approximation here. MDXG hasn't triggered, this hasn't triggered, Rivian triggered, LI triggered, and then MNSO hasn't triggered for today. So instead of doing $1,000 risk, if you can do 50, so be it. Start with 50. If you need to do 100, start with 100. Do whatever you need to do, and just keep making progress. Keep moving forward, and then good things will come. I mean, just that's how it is. Life will make way for you. It's just the doors will open up. But if you only do it half-heartedly, if you're a trader, but you're only doing it because of the money, or you're a trader but you really are doing it only because you don't want to go and work, because it's who wants to work, right? This is fun. This is like, you're from the comfort of your own home. I'm wearing shorts and a t-shirt, and I don't have a boss, and I can do whatever the heck I want. And with the click of the mouse, I can make a lot of money, and that's fun. But if that's the only reason why you're doing it, is because you don't want to go out and work, but you're not really into trading, you can become marginally successful, but you're probably not going to become like super successful. So if you're in it for all the good reasons, like this is what you love to do, and you really are committed, and you dedicate yourself to it, you put in as much time and effort that's required, that's needed, then I think it's not rocket science. Okay, I don't want to say it's really easy. I don't want to say there's not much work involved. There is. But if that's what you love, then it's not real work. It's fun. You think when I'm doing my work after the close, you think I'm stressing out? No, I'm watching a movie, I'm listening to music, I'm eating my lunch, I'm making phone calls or whatever, and I'm doing my work at the same time. Okay, I'm watching the Warriors beat the Lakers or whatever. You know what I mean, James? I'm just saying. So James is a Lakers diehard, and I'm a Warriors diehard. So, you just, if you're in it for the right reasons, I think, like, there's no way you're not going to be successful. I'm not making any guarantees, but if you're in it for all the right reasons and you put in the time and effort, it's not rocket science. That's what I think. All right. Okay, let me see what the other questions are. I probably, by using this method, do you trade more in the morning or the afternoon? These days, more in the morning, not because I want to or don't want to. I just go with the flow. If the morning is when the opportunities are available to us, then that's what I do. I take advantage of the opportunities in the morning, because in the afternoons have been really slow. So right now, morning mostly, but some days, some months, some periods, I'm just as busy in the afternoon, if not busier. Let's see, Samuel. Okay, yeah, I answered that question. Like 20% morning, 80% afternoon. Again, it's just different from time to time. Sometimes it's all about the morning. Sometimes it's all about the afternoon. This is the hardest thing about the market that I didn't know, which is that it changes. It's like life, it changes. So that's the hardest thing about the market. is it doesn't stay the same. It's like, it's like life. It doesn't stay the same. It stays the same. Every day you go to sleep, and every day you have to eat and wake up, and right? But it's every day is different. And the same with the market. If it's different, not in terms of like every day, it's different from time to time. Sometimes, like during the pandemic, it was a very unique market, right? During the Trump administration, or presidency, I should say, it was a different market, right? And there are markets that are really good. Some markets are a little bit slow, but you have to adapt, and that's nobody told me that. So the first time I had a hard time, the first time I was doing well, I was already profitable on a consistent basis, and the market changed like that. I gave back $40,000 before I knew what had hit me, before I knew that it wasn't really me. It's not that I'm trading badly all of a sudden. It was more so the market had changed, and I didn't know it. I didn't realize it, because nobody told me that. Oh, listen, kid, the market changes from time to time, and you have to roll with it. You have to adapt your style to the ever-changing market environment. That doesn't mean that, I will stop trading gaps, or that I will stop taking the patterns that I do, but maybe less aggressive sometimes more aggressive. Sometimes I'll focus on a certain pattern in particular, a certain style. So you just adapt your style and level of aggressiveness to the market. That's what I mean by, you have to adapt to the market. What happened to it's still there. It's still there. When I look outside, it's right there. So yeah, I still have my $1 million view. Thank you. I am really lucky and that I have what I have. All right. The treadmill is right under the desk, and as you know, sometimes I'm trading on. I have a sit-stand desk. I'm trading and moderating, and I'm on the treadmill. So it's pretty good. Life is good. So, and I'm looking at $1 million view. Just saying. I live in a high rise, so I have a good view by being on one of the upper floors. So, okay. All right. Any other questions? Okay, I see. Have you seen a necessity for rule changes? No. You still follow the same rules. I still follow the same strategies. I still do me. I'm still the same guy, the same trader that I was 15 years ago. But you just, again, you adapt, you just flow with the market. So you adapt your level of aggressiveness. And if you happen to notice that a certain pattern is working really well, then you focus most of your time and attention, most of your time and energy around it. Do I live in the Eastern time zone? No, I live on the West Coast. I live in California. Are you playing the SPY today with either side? Oh, no, but I'll talk about the market. We'll review the market. We'll talk about it before FOMC. We still have another 50 minutes. Okay. Let's see. So for some reason my voice and video are not in sync. That sucks. That's a bad movie you're watching. Kidding. I can just get the camera off. I don't know why. Maybe I got too many things going on today. Maybe I just need to clear the cache or restart my router or something. Not sure why I'm having issues today. Let's see the view. I'd have to grab the webcam and point it to the view. You see it every week when I do the videos. Not every week, but most weeks. Can I show my 5-step? Absolutely. I'll email it to you. I'll have Amber email them to you, okay? Where is it? It's actually from my... I closed out of it, but it's from this course that I'm going to be teaching on August 5th. So here it is, but I took a picture of it last night. I'm not going to show you the whole course, but so here it is. Just going to go to the page where I talk about that, okay? So here you go. Here it is. That should be it. Okay. Is it? Are you seeing the whole thing? Let me see. Hold on one sec. I don't know. No, hold on. What is going on here? 1 second, please. Close out of that stuff. Okay, should be able to see it now. There it is. Those are the 5. Is that 5? 1, 2, 3, 4. Here's 5. If you want to take a picture, go ahead. Take a picture. Okay, but you'll have, I'll have Amber email to you. All right. Okay, any other questions? Any other questions? Look at the yen and the CWeb. Pretty bullish. Again, the swings are up now 24K on the day. The swings. But no jinx, that's the thing about the FOMC. Now it could get taken away just like that. Right? So, and by the way, we have to review the earnings list. There's 170 items on the earnings list tonight. The swings are emailed every day to you. So, you should have been getting those emails every day. So basically, so here it is. So you get an email that says, here's what the email looks like. It says, hello, whatever. You have a new strategic swing trader update. You view the update, you click on it, and it takes you to this newsletter. It's really a table. It gives you the new calls, right? And it gives you the current open positions with any, if there's any change to the open positions, I highlight it in yellow. And I tell you what the new stop is gonna be. And it gives you additional ideas. There's a table legend explaining what each, if there's, LS means long or short, simple stuff, and there's some rules or guidelines. Okay. So, and if there's if it's necessary to send out an intraday update, I send you an email basically. But you get this every morning around 8 o'clock. Okay, that's what it is. All right. Have you thought about listing stocks alphabetically in the newsletter instead of by date? I haven't. You think it's a good idea? That might be a good idea. You do. You think it's a good idea. The problem is, what I do, this is what I do, guys. So every day when the plays trigger, the ones that trigger, I copy them from the new trades table and I paste them under the open positions, basically at the bottom. So basically the open positions are listed by date rather than by alphabetically. But I don't know. By the date is good. Date is much better. I mean, we could experiment and see how it goes. We could just go by symbol and and see how it goes, because it is easier to find the symbol if it is easier to find the play if it's listed by symbol. But then it's gonna be, the date for it is they're gonna be all over the place. So I think, I see that, I see your point. I'll experiment with it. How about that? I'll experiment. In the afternoon, I send you the earnings alert, but I haven't even scanned because I'm doing the webinar today. I mean, this discussion, right? All right. So as you can see, we love having you, but you do disrupt our day a little bit. Like right now, I would have scanned the earnings list and I'm maybe trading the afternoons already. I'm not doing that stuff. So we do only these open houses a couple times a year, so it's no problem. Do you have a portfolio rules as to how many swing trades you can have at one time? Look, here's the thing. People come up with rules all the time. I used to be one of those guys because, to some extent, I try to be a perfectionist in some ways, and they come up with rules all the time and that don't make any sense. So what's important is not how many positions you can have at any given time, is how much exposure you have. If I'm in a play and it's up $20,000, why would I care about having, if I'm in 5 plays and each play is up a lot of money, why would I stop myself from taking another play because all of a sudden now I have too many plays? Maybe your rule says no more than 5 plays at any given time. Well, maybe you already have 5 plays, but they're all deep in the money, and now you're stopping yourself from taking another play that, because you have 5 open plays. So it doesn't make sense. They're deep in the money. Unless some disaster happens, a mushroom cloud goes over DC or something, you're probably going to be okay. You're up 100K or something. You're going to be okay taking new plays. So what I do is, as long as I have a nice cushion built in, and I keep looking to the right because that's where I run my swing account on my laptop on the right. As long as I have a nice cushion, I can continue to take trades. Now, if I don't have any money built in, if the open positions are like breaking even or something, then yeah, I don't want to keep just taking more positions. I'll limit the amount of positions. But that rarely happens. If the positions are breaking even, I'm not finding new plays. I'm not able to, because the current plays that I have are not working. So I just lay low, basically. It means the setups are not working, so I stop taking them. So it's a natural process for me in terms of managing risk. It's not by coming up with some arbitrary rule about how many positions I can have open at any given time. It's more about, hey, am I doing well or am I not? If the positions are doing well, then I can just continue to take plays. If the positions are not, then I just take it easy. That's it. I don't have a specific rule about how many plays. Does that make sense? Okay. Yeah. Got you I have it already as an open position. It's one of the China stocks. It's doing well, huh? I don't know that I don't have it on a chart, but I have it in my P&L. In my account. I have a lot of China stocks. Remember on day 1, I said, trust me, that's the place to be, but I said, maybe I shouldn't say that. Because what if they fail, the China stocks, which they have in the past many times. So I do have a lot of China stocks in my account. You would think I'm pro-China. I'm not. It's just the China stocks look good right now. Okay, for swing trades, do you have orders in to take the trades as they trigger, or do you wait for an entry after the trigger? No, I put the orders in the day before. Okay, so the night before, when I complete the newsletter, because I do it the night before, I immediately put in the orders in my my account. Okay. Are the China stocks doing well because of all the Fed talks? No, because they're bottoming on the charts. So if you look at the chart, I went over them already multiple times. It looks like they're bottoming. See how the 20 is curling, starting to point up? That's why. Same with BABA. See how it's bottoming after being in a downtrend since January? You see the PDD, those are all Chinese. See how it's bottoming? But it's already it's already in an uptrend on the PDD. It's showing a lot of relative strength compared to the other stocks, other China stocks. For newbies like myself, would you please walk us through how you would recommend writing your buy-sell orders for your day trades? How you would recommend writing? Okay, hold on just a second. Are we talking about the actual order? Like how you do the actual order? Or are you talking about how you write up a strategy? How you basically figure out what pattern to focus on? Like how do you figure out what to go after, or how do you execute the trade in your platform? What are we talking about here? Let me know. Are we talking about the actual execute the trade? Okay, the trade, easy stuff. So you have this I use, depends on the platform, but you have this in E-Trade. You have this what is it called? Depth of market window. So you open this and you can, let's say you want the snap long at 10.15 or at 10.20, and you have to calculate the share size, right? So you have to figure out how much to buy based on your risk amount. The formula for calculating the share size is share size equals risk amount, what you want to risk per trade, and I can spend 20 minutes talking about how much you should risk, basically divided by the stop size. So if your entry for Snapchat, your entry was, so the stop size is the difference between your entry price minus stop price. Okay, so now if your entry was at 10.50, your stop was at $10. That's a 50-cent stop, right? 10.50 minus, or 10.51. I don't recommend getting in at the half number or the whole number. 10.51, stop 9.99. That's like a 52 cents. Let's just say it's 50 cents. And let's say you want to risk $500 on that trade. You go, okay, my risk amount is 500 divided by 50 cents. Oh, it's 1,000 shares. 1,000 shares. Stop limit. Stop order is 10.51. That's when the order goes live. And the limit, you give it a few cents. 10.55. 5 cents. And then you click buy. Boom. The order now is live. But I'll have to cancel it. So you can do it that way. Or you can also create speed keys or hotkeys. When it comes to speed keys, I'll show you what I like to do. Okay. So every little thing is is like a whole discussion. It deserves its own discussion. Like, how do you create hotkeys? How do you execute a trade? Well, the truth of the matter is, it's very simple, but it would take me probably 20 minutes to like show you exactly how. You can do it manually like this, but that takes time, right? Now, if you don't know what a limit order, market order is, stop market, stop limit, then you probably need to spend some time on Investopedia or something. Just Google it. What's a stop limit? What's a limit? What's a market order? Investopedia. They have. So go there, spend some time figuring out. You can just Google what are the different order types in stocks. Boom, and then they talk about the order types and what each one means. I just Googled it, right? So if we're talking about something that simple, if you're talking about, well, how do I create hotkeys so that or speed keys so that I can execute in and out of the trade really quickly? Well, for that, it depends on how the platform works. Some platform, you have to specify the share size in advance. Some platforms you don't. You can type it into this quantity field, and then you hit the hotkey combination, and it executes. So it depends on the platform, but in general, you want to have. I'm looking for something here. Okay, here we go. In general, you want to have a hotkey set up. This is Sterling hotkeys. You want to have a hotkey set up for. Hold on one sec. So this is using the Sterling platform, but it applies to every platform almost. A hotkey to buy. So you buy the position, the stock, quickly without putting in an order in the system at the ask plus 3 cents. Okay, and you have to and then for the quantity, it's whatever you put into the level 2. So if I go here, that's Sterling. I type in 1,000 shares, and I just click whatever the hotkey is. In this case, it's going to be Alt and 1. Okay, it'll buy me 1,000 shares at the ask plus 3 cents for the limit, basically. So you want to have a limit buy or a cover, but limit buy, let's say hotkey. You want to have a limit short hotkey. So a speed key for shorting. At the bid, minus 3 cents. Okay? And then you want to have an exit at the market hotkey in general. So 3 hotkeys and you're done. You literally are done. Close position, the escape. If I hit the escape button and I hit it not anywhere randomly on the you have to have the level 2 has to be the active window. So you click on the active in the level 2 window. This way it's the active window, and you hit the escape button, and then bam, you're out. So 3 hotkeys: one to buy or cover, one to short or sell, and one to exit, close the position, whether long or short at the market. Now, some platforms like eTrade Pro, it requires that for every hotkey you specify the quantity. In this case, you have to create a hotkey for, let's say, you trade 1,000 shares, 2,000, one hotkey for 1,000 shares, one hotkey for 2,000, 3,000, 3,500, So that way you have to create 1,000,000 hotkeys, but they're all the same. They're all basically the same. You buy one to buy, one to sell, one to exit, or one to buy / cover, one to sell / short, and one to close the position at the market. And that's it. Simple as that, basically. Okay. Where you only risk 1% of your account for your day trades, swing trades. How much of your account, of our accounts, should we risk per position? I hate these kind of questions because it's not like that. I just feel like the amount that I'm comfortable with, that my account also allows, it'd be if my account had only $25,000 in it and I was taking $5,000 risk per trade, that would not make sense. So I don't have a specific rule as to how much of my account, how much I risk per trade based on my account size. But in general, I would say for day trades, it should be no more than 0.5% of your account. Your cash account value, okay? Not more than 0.5%, because if you do 3-4 trades at the same time, you're gonna run out of buying power. 0.5%, not of the leveraged, not of your buying power, but of your cash value of the account. And then for the swing trades, I don't really know, to tell you the truth. Maybe for the swing trades, maybe you can do up to, so if we do 5%, that would be maybe too much. So 5,000 and you have 100,000. Yeah, I would say for the swing account, between 1 to 2%, probably, of the cash value of your account. 1 to 2%. Okay? Of the cash value of your account. But it depends on the type of trader you are. If you're Warren Buffett and you only have, I'm kidding you, but if you only take one trade at a time and you say, well, I can't do more than 1% of my account value because Sammy said so, that's not a good idea, because you're only taking one trade at a time. If you have 30 different positions, then yeah, you probably can't do more than 1 to 2% because you'll run out of buying power. That's the reason. You'll run out of buying power. But I don't have a specific rule. Sometimes I end up with trades that I don't make, that don't make the final SST list because I don't know when the spreadsheet is complete. Could you alphabetize when you are finished, or make some notation on the spreadsheet? I like to enter the trades at night because I'm on the West Coast. Oh, okay. Oh, I see what you mean. Yeah. I mean, I can. So what I could do is, when the trades are complete, so what you're asking is, when the trades are complete, could you let us know? I can. It's just an extra step, and sometimes I forget to do it. I used to put an asterisk over here, an asterisk. So this way, if you log into your account and you're at night and you don't want to wait for the newsletter, then you know it. I'm done with the spreadsheet, basically, with the Google Sheet. So I'll just do that going forward. I'll try and put in an asterisk once I'm done with the trades. So then you know it's the final list, basically. Because what Donald is saying, he logs on to his T3 Live account, to his customer portal, sometimes too early while I'm still working on it. Okay, but the other thing to do is check in the morning to make sure that what you saw the night before also matches what the newsletter that you got in your email to you in the morning. You could do that too. Okay, what's your hotkey to short an SSR stock? Is short at the bid, not at the ask. You'd never get filled at the bid. Does buy key include stop loss? No. If I need to put a stop loss, I don't have a hotkey for that. You have to I just go right here and I put a stop, usually stop market, and then I just say 1050 cover if I'm in it short, or sell if I'm in it long. So no, I don't have a hotkey for the stop order, that part, because basically if you're putting in a stop order, you have all the time in the world. What we're worried about is missing the trade because it's moving fast and you don't have the time to be filling out the order entry window, typing in individually, filling out each field. So that's what we're worried about, is the entry. Okay, or if the trade goes against you quickly, and then you want to get out quickly, that's what we're worried about. But if the trade is giving you all the time in the world to put in a stop order, you don't need a hotkey for that. You can just do it manually. Okay, let's see. I do need to switch over to, it's already 1:30. I need to scan the earnings list. VKTX is up $1,000. It's actually 900. VKTX. Okay, all right, guys. So with that said, I am going to on your swing on Rivian trigger close above. No, just when it takes it out. It basically triggered already, but it's not going anywhere, is it? No, it's down $30. Rivian is not going anywhere, but it's a big stop. So when the pattern is sloppy, I don't expect it to pop right away. Okay, if it's tight, that's when I expect it to go. But since it's sloppy, you also have to give it a really big stop. So I'm giving it to probably the SPARS low, to 2260. It's a big stop. If it was a very tight pattern, I would put the stop right here, like right under the base breakout. But since it's a very sloppy setup, I'm giving it room. It should be in the newsletter, Arlen. It's not in the newsletter. The target for Rivian, it should be in the newsletter. It's 36 minimum. I would say $36. Okay, let's see. What are my thoughts on the SPY? Yeah, we'll talk about the market. Looks like you have a platform that's great for day trading. Can you suggest a platform for newbies? Newbies. For what? For day trading? For day trading, I use eTrade Pro. It's a free platform. eTrade Pro is what I use. eTrade Pro. Most people in the room use Thinkorswim. Think or Sync or Swim. Most people in the room, that's what they use. Toss from eTrade. But I like from Ameritrade. I like eTrade's platform more. All right, okay, guys, let's go ahead and end the recording here, and then get started on the trading this afternoon. Hope you enjoyed what I shared with you. It wasn't like the typical presentation where I'm going over slides and charts and things like that. This is different. I did it by popular demand. So my allergies are acting up.